My name is Michael Guyad, publisher of the Lead Lag Report. Joining me for the hour is Mr. David Lin. Now, if any of you are not familiar, make sure you look up his name and check out the various interviews he does for Kitco News. David, for those who are not familiar with your background, introduce yourself. Who are you? How'd you get interested in financial journalism, in broadcasting, producing, and what are you doing with Kitco?
Thank you for the introduction, Michael. Thank you all for listening to our space, and thank you, Michael, for inviting me. Yes, as Michael mentioned, I am the anchor for Kitco News, or one of the anchors. I've interviewed Michael McGuyed several times in the show, which is how we've become acquainted. He's one of our more popular guests, by the way. So if you haven't checked out Michael Guyed on Kitco's Twitter and YouTube accounts, please do so. He's had a number of hits, over 300, 400,000 views. But I've become... I got into the space in financial journalism 4 years ago when I started working for Kitco in late 2017, early 2018. And I started off working as a producer. I am still one of their producers, but I started anchoring for them full time 2 years ago. Prior to Kitco, I worked in finance as a macroeconomics researcher at a firm called BCA Research, the bank credit analyst in Montreal. And I graduated from McGill University in Montreal with a major in finance. So I never actually envisioned myself working as a financial journalist or broadcaster. I wanted to work on Wall Street. To be perfectly frank, my grades in university sucked, so I never got any iBanking internships. So I ended up working in macro research, which I liked. But then I got an opportunity to work as a journalist, as a producer, which honestly it wasn't like a career, like the top career choice for me at the time. I thought maybe it was just going to be like a short-term 2 year stint, and then I go back into work in finance. But so far, I'm doing it, and it's been a great journey for me, and I love it. So, one of the upsides of my job is to talk to interesting people, a lot of different interesting people, like Michael pointed out earlier, and one of them has been Michael. So, yeah, very grateful for this opportunity, and excited to speak with you all today.
So I didn't realize that you had worked with BCA Research. That was one of my father's favorite research services. The great book, with all the different analytics. Talk about what kind of research you would do within BCA, because I think they actually have a pretty strong product. I don't know how well known they are among kind of individual investors here in the States.
Yeah, most of their clients are institutional buy side. So they have a variety of different products covering different sectors. So they have a bond publication, global equities, U.S. equities, commodities, so on and so forth. I was a generalist, so I got moved around a bit on different teams. The last product I worked on was a global ETF service. So basically allocating global ETFs according to a global macro overview. So my manager would literally just pick a bunch of ETFs to put in a portfolio, and then it would be a model portfolio for the publication, and we track its performance. And that was a lot of fun. So it was not specific to one sector. It was sort of a strategy, a tactical and strategic allocation based on his global macro outlook. And I learned a lot, and that definitely translated to what I do now. So macro has always been my bread and butter. It's always been my background.
All right, now let's talk about, for the audience, what's the difference between being a producer versus being an anchor, right? Because the producer is really the one that makes the magic happen on the back end, right? From my experience, when I used to do the media runs with Bloomberg and CNBC, a lot of the producers were often respectfully kids just coming out of college that didn't necessarily understand markets. Markets, you understand markets, macro. Talk about the distinctions between the two and how your knowledge set maybe makes you better at it, I'd argue, than others.
Oh, well, thank you. That's a great compliment coming from you, because you're one of the more knowledgeable people I've talked to. But I think that the main difference between a producer and an anchor is obviously the producer doesn't go on air. The producer's job is to book guests, come up with ideas, come up with questions, and submit questions to the anchor, and help with all the back end stuff, all the post-production, creating the videos, creating the graphics, publishing it, coming up with new production strategies, so on and so forth. The anchor does some of that as well, but the anchor is mostly there to speak with the guest on air. And I think that my experience as a producer really helped me transition into the role of an anchor, because I was never trained as a broadcaster. I never went to journalism school. I never learned how to be polished like some of my other co-anchors are. So I kind of just went in with this mindset of trial and error as a broadcaster. And over time, I got better. Don't listen to my previous recordings, please. Don't. Before I spoke to Michael Guyad, just don't listen to those. But definitely went in with the mindset of let's just talk about finance, let's just talk about econ because that's what I'm interested in. That's what I would like to know if I were a trader or investor. I would just come up with questions for myself. In the early days of my broadcasting, I would just produce for myself. We've hired a new producer recently, but when I produced myself, I just wrote questions that I would be interested in. I put myself back in the shoes of an analyst at BCA and thought, what would I ask someone like Michael Gayet, who has years of experience? What would I like to know? And that was basically the mindset that I had. For me, there was no difference between a producer and an anchor because I did both, and I still do both.
All right. Now, you said you're trying to find things that interest you. I often wonder if the challenge with financial media or media in general is how much confirmation bias is there among the anchors with the producers with the kind of guests they're getting, right? So how do you try to balance that out? Because listen, you want to be fair and balanced, right? And you're trying to provide a different take on markets than the kind of short sound bites, but you also want it to be somewhat interesting to you as the person spending the time doing the interviewing.
Yeah, I will just be honest here because one of the biggest challenges as somebody who works in media that I have to overcome is the fact that I am fully aware of the stories that people will click on versus the stories people don't click on. That is to say that I'm not creating a bias. It's just that it's certain stories are biased towards getting more viewership. And those stories tend to be stories where the guests predict some sort of bear market or catastrophe, basically doom and gloom headlines. They do very well, much more so than the bullish headlines. It's not like I've never had any analyst or economist on that's made bullish predictions. We've had plenty. It's just that they don't get as much attention from the viewers, not from me. And so being fully aware of that particular bias from the audience, I have to create content that does two things: informs the audience, but also generates views for us. So unfortunately for the media business, the more sensational you are, the more views you get. And sometimes it's just a matter of drawing the line between, okay, let's just report on the facts versus let's create a narrative that's going to draw in clicks. And I feel like that's something I actively try to do to be fair and balanced. And I see a lot of other media online that really falls victim to this trap. And I think that's something that the media needs to be more aware of.
And it's especially challenging on YouTube, right? Because it's largely algo driven, right? In terms of YouTube kind of popping up a particular video on the recommendation screen. So if it's all doom and gloom, okay, that's unfortunately what's going to get the algo to pick it up too, right? So I can understand why people get skeptical of the media seemingly always being overly bearish and negative. It's just that's what people do click to, exactly to your point.
I had a friend who actually watches Kitco, and he said, David, I can't watch your show anymore because every time I do, I get stressed out. And that kind of opened my eyes up a bit to create more balanced content. To your point, Michael, I mean, you're absolutely right. I think, the media has to just be responsible with the narrative they create. And that's always just been a big challenge for me. I don't think the media is very responsible, generally speaking, from someone who works in media. I think people out there are just trying to create clicks or things that people will click on. And most of the things you read are very one-sided.
So that I think goes a little bit to the name of the space, which is economists are wrong. Because I think a lot of macro confuses economic data with on the ground data and financial markets, which can be different than economic projections. Talk about some of the more interesting guests you've had who have been right in how they communicate or identify things, but maybe haven't fully gotten it right in terms of what you actually do that information. Because I think the issue with macro is a lot of people like to talk in terms of macro, but I always go back to the path matters more than the prediction, right? How do you get to your endpoint matters more than the endpoint. So just talk about some of the guests you've maybe had in the past that were interesting. You think their theses might be right eventually, but it's just hard to execute in practice.
I'm not here to plug you or anything, but I honestly think you were one of the more informed guests. Go and watch my interviews with Michael if you haven't already. You made a number of correct calls, including the fact that housing market's slowing down. But you're absolutely right. I think that, when I worked at BCA, my first manager told me that our clients don't pay us money for our calls. They pay us money to read our rationale. He said that during the 2008 financial recession, a number of banks made the correct call that markets would collapse, but the rationale was completely off. And ultimately, you have a 50-50 chance of making a correct call, up or down. It's really your rationale that people pay to listen to or watch or read, whatever the case may be. In terms of, my favorite guests are people who explain the thought process well in a more or less rigorous scientific manner, which you do. Michael. And I think that, again, going back to your point, the rationale is more important than the call. If you think that gold's going to go up to $2,000 because you think that interest rates will eventually, stop rising, or if you think that inflation is slowing down or picking up, whatever the case may be, suppose you make your assumptions of your call and all those assumptions turn out to be correct, but for some black swan reason, gold doesn't go up to your predicted price in the predicted timeline. I think that's more acceptable than saying gold's going to go to $2,000 and it just by coincidence reaches that price and all your reasoning was wrong. So I think to that point, I don't want to name specific people, but the guests that I've personally enjoyed speaking to the most have had a well thought out academic thought process that you can go back and rewatch their interviews and think and see that they were right in their reasoning, and perhaps their calls have been wrong, but generally speaking, that is due to some external force that you know wasn't wasn't predicted.
No, but that's actually really important. It's like I keep going back to people seemingly judge based on outcome. You have to judge based on reasoning and process at the moment in
Yeah.
time that the conclusion occurs, right? It's like, you know, I think unfortunately I always use this line, right? We live in the small sample. So if you were to repeat, the same set of conditions over multiple roll of the die in any investment process, even if you're right 60% of the time, you're right, right? And the process gets you to the probability that's highest. But the point is that you get eviscerated not for having the right thought process, you get eviscerated for having the wrong outcome, even though the thought process is right. And that's, I think, very hard for people to mentally get their heads around when they're thinking about how to position a portfolio.
I think economists get a little more slack than some other professions because everyone knows that you can't be right all the time. But yeah, to your point, if you're right 60% of the time as an economist, you still have clients. Let's say if you're a surgeon and you're right only 60%, you go to jail. My point is, economists aren't always right, and that's part of the game. I think the people with the highest batting average over time are people, like we said, with a rigorous thought process that makes their predictions based on a series of rigorous analytical tools that can be translated to all sorts of assets. And they have a certain discipline in their trading that they follow. Gareth Soloway, for example, is a guest I've had on regularly, and people like him. And he has a certain set of principles in trading tools, and you can check out some of his interviews with me that he follows. If the market goes down by a certain percent, he would trigger a stop loss. He's unemotional with his process. He doesn't let his personal biases get in the way of his trading algorithms. And I think the most successful traders, I'm talking about traders on investors, are people who follow a disciplined, rules-based trading approach that isn't influenced by emotions or changes in macro conditions that are unforeseen. Over time, those people perform better than I think people with no rigorous thought process or disciplined approach. I think you just have to moderate the way you write headlines, and that's something I have to be very cognizant of myself. People talk about writing clickbait. A clickbait is a title that has nothing to do with the video. If I interview Michael Guyette about Bitcoin and I put a title that cats are dying in Siberia, that's a clickbait headline, right? But if I write a title like Michael Guyette's prediction that Bitcoin is going to 13,000, is that sensational? Perhaps. Is it accurate? Yes, if that's his call. And I think you just have to, for me, what I do, my process, well, I have two processes. One, I go through the video, I go through the interview, I have a list of the questions that I ask. And after the end, I review the questions and I review the answers and the responses. And I just pick the thing that I think, A, has the most SEO potential. So search engine optimization, usually things with prices do well. Usually things with asset classes near the beginning of the sentence do well. Gold, Bitcoin, stocks, I'll put that in the beginning. And I'll just highlight a call that the guest has made that I think is strong and reasonable. I try not to embellish the statement too much or the view too much. In fact, oftentimes you'll see on Kitco, I will use an exact quote for the headline without taking it out of context. There's a second approach, what I do, which is not really journalistically sounding for other journalists out there. I don't recommend you doing that. And this is something my manager's spoken to me about, but she understands it works. I sometimes, before I even book a guest, I think of the headline first. So I will think of a thumbnail and a headline. Let's just take this week, for example. One of the big headlines this week going on in the financial news world is FTX going under, and Sam Bankman-Fried's been all over every single headline. So if a headline I would think of is, for example, why did FTX go bust? I think that's something everyone would like to know. And I would think of that headline. Then I would think about the person that I think would answer that question. And then I would come up with questions accordingly and book that guest. So I kind of reverse engineer a result even before I begin. I think we have to differentiate between economists and portfolio managers. A lot of the best economists I talk to, again, follow a very rigorous academic approach whereby it's almost scientific in their research process. They collect the evidence. Well, first they form a hypothesis, then they collect the data, then they form sort of a view around the data that they collect. And then at the end, they either nullify their hypothesis or they support it. And then, so if let's say your hypothesis is that the housing market is going to collapse, then you go look for the evidence to support that. And if you can't find any evidence, you have to nullify your hypothesis. And a lot of the best economists I talk to follow that process. That's something I've been trained to do as well. To your point about people following their politics, a lot of other people I've talked to, especially on the buy side, they are mandated to have some sort of investment philosophy that they have to follow, or they have a view that they have a certain bias towards. And I find that sometimes they kind of do the reverse, which is to say that they have a view and then they find facts or data to only support that view, and they ignore everything else that may counter that particular view that they already have. That is to say that they have selection bias. So I don't think they have politics. To my experience, I don't think it's usually politics that get in the way, although that could be part of it. But I think it's possibly because they have a certain view on certain markets that they have to follow. And then when they come on the show and they sort of just talk about that particular view, which is fine. I mean, everyone's entitled to their opinion. My job as a broadcaster is to challenge any view that they have and sort of bring out the other side. And most often than not, you'll see that the economists who have a rigorous thought process, who have already challenged themselves, they answer my challenge questions the best.
I'm amazed at how YouTube has become sort of almost like the de facto online place for financial media outside of Twitter. It's like if Twitter no longer exists, it's going to be YouTube that overtakes everything as far as this type of content. I wonder, David, if you think YouTube is still sort of underappreciated as a source for interesting interviews, for financial media content, or if you think FinTwit is still going to be number one, for most people.
Correct me if I'm wrong, but you can't really stream a long form video on Twitter, can you?
You can, I'm not really sure. Clunky.
All right. Yeah, I think until they make that interface smooth, I think YouTube will still be the dominant platform for long form podcasts and interviews. A Twitter is great for text. I've noticed just for myself that the videos I post on Twitter don't perform as well as just text or images. TikTok is really taking over as a platform for financial news for younger people, believe it or not. Short-term videos, just sound bites of people giving their outlook.
That sounds incredibly scary if TikTok is becoming for this.
Yeah, a lot of financial gurus or influencers are on TikTok, and they're killing it, man. Like, TikTok is the number one growing social media platform in the world right now. That's not to say that YouTube will no longer be relevant. I think YouTube, in my personal view, will become, if not already, the dominant place for viewership of news, not just financial news, but all news. And if you just look at the data, subscription rates for cable news are declining fast. I'm in my early 30s. Nobody my age that I know personally and or younger has a subscription to cable news. The biggest cable news networks have like YouTube channels, and they have like paid subscriptions to their online firewalls. But most people my age just watch clips on YouTube, and most people don't actively scroll and look for things on search. If you look at the analytics of, let's say, Kiko videos, for example, most of the views come from browse features and suggested videos. Browse features is when you log onto YouTube and the homepage gives you whatever you see on the homepage. The browse features are just the videos on the sidebar. So that tells me that the actual search, the traffic that comes from like organic search is relatively low. So that tells me people aren't going on YouTube to search for a specific type of news or content, although that does happen, especially if there's big news happening. People want to find out what's going on with FTX this week, for example. But most of the traffic just comes from you browsing, and then something on the sidebar appears with a catchy thumbnail and a catchy headline, and then you click on it. That's the way media is being consumed these days. It's the equivalent of channel surfing back when everyone watched cable news. You're just kind of flipping channel 13, channel 14. Let's see what's good on. Let's see what good what's good on, and people just essentially set on a channel. That's kind of the same process, except they're doing it on YouTube now.
Yeah, one of the things I like about the way that you interview people is you're not afraid to push back, right? Because you know your shit too. I mean, you've done this as a as a career with BCA, as you mentioned. How do you politely call somebody out on their bullshit, especially when it's it's being recorded? It's got to be challenging, right? Because you don't want to offend the guest, but at the same time, it's like, all right, well, that's not really an accurate statement that's being said by that person.
I can't think of a single person I've had on the show that's full of shit. Like everybody I've interviewed was super smart in their own right. That I personally learned a lot from. That I would say 99% of people I've talked to, I have a lot of respect for their own views and their own work. I never give my own views on air, and I try very hard to keep it neutral, and I don't frame my questions in such a way that I would seem like I'm personally disagreeing. Let's just take an example. I mean, I do this with you all the time, Michael. Let's say you think the housing market's going to go up. Well, a simple way to challenge that is saying, well, I just talked to somebody else who said the housing market's going to go up. Here's his reasoning. He's looking at a lot of capital being put on the sidelines, and that capital is ready to be deployed in the housing market. How do you respond to that? I think that's a simple way to challenge somebody. Just bring up an alternative viewpoint. And I've talked to so many people that for every one bullish call, I basically get another bearish call. So it's quite easy to do that. And that's something that I find doesn't really offend the person, but also gets them to critically think about their views.
Yeah, no, that's always a good way to do it. You kind of almost put it as like as if there's an argument that's happening, but the other person doing the other argument's not there. That's a smart way of kind of
even if I do agree with you, Michael. Let's say you think the housing market's going to go down, and I personally think the housing market's going to go down. I will still use the same approach to challenge that view, because someone else thinks the housing market's going to go up. So I would do that regardless of what I think. So it's not an indication of my views just because I'm challenging you.
Now, you said you had a friend of yours that said he can't watch you anymore because his anxiety goes through the roof. Talk about some of the differences between the negative narrative and just life outside of what you're doing with Kitco. I mean, is it really as bad as people are making it out to be, or is it just more clickbait or maybe we haven't seen the worst of it just yet? But, it seems like there's a big disconnect between consumers' perception of the world and macro financial analysts' perception.
I think that was certainly true during COVID. There was doom and gloom headline everywhere, including on Kitco. And if I talked to my friends who live in the States, who live in California, they said everywhere they went, malls were full, restaurants were full. So I was personally confused when when I talked to my friends who lived in states that were or cities that had a less stringent COVID lockdown policy, and I'm talking to everybody that's literally predicting Armageddon. So there was a lot of disconnect there. Some of my friends were laid off during COVID as well because they had to cut back. Right now, it's a little bit different. I think there isn't so much disconnect that I'm witnessing, although people are starting to cut back on spending. That's for sure. Me personally as well. Housing. Here's just a stat I was looking up. In Canada, national home sales were down 3.9% on a month-to-month basis in September. I'm just reading it now. The actual activity, housing activity, came down 32% in September. And the national home price index declined by 1.4% month over month, but it's still up on the year. I personally own a condo in Montreal. I called him a real estate agent, and I asked him like how much could I sell this place for, and I would have to mark it down relative to last year, but over a 5-year period, it's still up. So I think what that tells me is that people around me are cutting back on spending, so that's very real. And people are holding off on home purchases. Another friend told me he's holding off on a home purchase because he expects mortgage rates to go up even more. And he's asking me like, "Hey, like when can I buy a home?" And I told him I don't know. Let me ask that to Michael Guyette or somebody else. But yeah, people are definitely their sentiment matches some of the headlines that I'm actually releasing myself or seeing on the news. So I think I would say now there is less discrepancy than during COVID, from what I've witnessed.
Yeah, that's an interesting point, and I've had a number of thought leaders talking about Canada's housing market and how these variable mortgage rates basically get reset, right? That it's not sort of a fixed term like in the States. It's not 30 years in the same way, so it has a more pernicious effect on that. I'm curious with all the interviews that you've done. do you yourself take any actions, based on what you're
Sure.
hearing from different guests? I mean, one thing is to be interviewing somebody, for content. Another thing is, well, is the person actually right? And then for your own selfish purposes, acting on it.
Yeah, it's difficult for me because I interview a lot of different people with different views. So I get conflicting arguments thrown at me all week long. I don't personally own any of like the smaller stocks that anybody recommends. Like I interview people who talk about the resource sector all the time. Full disclosure, I don't own any resource stocks, and if I did, I would have to disclose that. I actually did an interview not too long ago. I can't say who it was with, but he actually pitched a bunch of junior miners. And the very next day, I was at a conference. The very next day, somebody came up to me and said, "Did you see those stocks that you talked about in your interview that you released the night before?" I said, "No, what happened?" Every single one of those miners jumped like at least 10%. And that was a day when the markets were down. So so no, I don't take positions on the things I talk about. On bigger things like gold and Bitcoin and, like stocks overall. Yeah, of course. I will consider taking investment advice from people with a good track record and people I personally agree with. A lot of people were talking about a crypto winter earlier in the year, and that prompted me to sell a bunch of my stuff as well. No one I've talked to right now is super bullish in the intermediate term on risk assets. So that's actually pretty consistent across the board. So there's not a lot of discrepancy there. I haven't really talked to anybody recently that said stocks or cryptos or the housing market is going to rebound immediately. So if there's consensus on any one thing, it makes it easier to take action on.
Right, which is basically being contrarian. I mean, I keep going back to,
Yeah,
there is something to the idea of contrarianism, right? When all you hear is people regurgitating the same narratives. I've used that line before. Markets are forward-looking, your narratives are not, right? And it does seem like a very one-sided argument, right? That things are going to keep getting worse. I mean, the real unpopular opinion, which you're never going to get clicks on, is what if Powell ends up getting it right? You're not going to get clicks on that, but nobody even wants to entertain that possibility.
every single person I've talked to, almost every person I've talked to, thinks that the inflation numbers published by the BLS are not indicative of real life. Most people I've talked to think that the actual numbers are higher than what's reported. In other words, inflation is actually higher than 7.7%, which is the latest number from the BLS. I just watched an interview with a professor from Wharton. I haven't interviewed him myself. He was on CBC. His name is Jeremy Siegel. I don't know if you heard of him, but he actually said that the actual inflation numbers are much lower than what what the government's reporting. And he actually said that if you just take a look at core inflation, stripping away food and energy, that the BLS uses housing data that's lagging. If you take a look at where housing prices are going now, and rent is going, and rent equivalent and ownership equivalent is going, that's actually down a lot more than what's being reported because they're using lagging data. So he's actually saying core inflation should be negative in terms of growth right now. So I thought that was a pretty interesting view.
Yeah, no, and I'll tell you something. This is what I think is also maybe the market is probably misinterpreting, which is that lagging data is really a critical point. It's not like housing is all mark to market, and housing is actually a bigger driver of disinflation than not, right? So if you're not having home prices mark to market, just because you're not seeing the lower prices doesn't mean it's not having a real impact on broader inflation, right? So that's I think also kind of an interesting dynamic. If you end up having real serious mark to market disinflation in housing, then the CPI is overstated.
That's true. Going back to your earlier question about whether or not people think the Fed is going to get it right, most people would disagree with that view that I talked to. There are a few people who have praised the Fed and that they've acted accordingly, and that it was difficult to make calls during the heat of the moment, which is during COVID, when things were more uncertain. Of course, looking in the rear view mirror, it becomes obvious that they probably should have raised rates sooner. But there were some people who sympathized with the Fed and said that Powell did more or less a good job with the information that he had. So I've gotten those views as well.
Yeah, probably a lower view. Probably a lower view.
Yeah.
It's confirmation bias. It is, right? Like everybody always wants to pile on.
It always goes back to media as well, because people love shitting on politicians, and those get clicks, right? It doesn't matter which side of the aisle you're on. If you say, "Oh, I agree with Biden" or "I agree with Trump," that doesn't generate as much clicks as saying this guy's wrong for XYZ reasons. It's just the way the algorithm works, I guess.
Yeah, no, 100% on that. All right, let's talk about your evolution in doing this, because not that I have the experience that you have, but I find that's like everything else, right? You got to practice, you got to do things to get better at it, and interviewing somebody is very different than being interviewed. I mean, most of my career was me being interviewed, and I started doing these spaces, and it's almost like a completely different skill set. Talk about how you yourself have improved over time, being an anchor, being a macro thought leader, interviewing other people. How do people actually get better at this business of interviewing others?
Let's just clarify. I don't consider myself a macro thought leader. I interview macro thought leaders such as yourself, but I don't consider myself a thought leader in this space. I do like doing interviews. I think I wouldn't. I don't think there was a strict process I followed to become better. I think it just I think I just became more comfortable over time. In the very beginning, I sat in front of a mirror and just talked in front of a mirror, and recorded myself and fixed things that I thought were awkward. I'm an amateur musician, so I grew up playing violin and piano, and that was the same process for me. Before I go on stage, I just record myself playing and watch the tape and fix whatever I thought was awkward. So I did that in the very beginning. I stopped doing that a few months in, because I just watched a replay of my interviews and fixed accordingly. I think the biggest thing that I did that helped me become better was I stopped thinking of the next question, and I just stopped to listen to what the person's saying. Because I write down these questions in advance, and I always interview people. And I see some people I've interviewed here in this space. Um, and it's the same process for everybody. I have these topics. Sometimes I'll talk to them in advance and prep, and I have a list of things that I want to talk about. But sometimes the conversation takes a different turn than what you're anticipating in advance. And so I find that my best interviews are the ones that have flown naturally. And to do that, I had to just listen and stop thinking about what I'm going to say next. And that I realize that translates to your everyday, or at least my personal conversations in everyday life as well. When you're talking to somebody, it doesn't matter if you're on, with a friend or with your parents or a date or whatever. Don't think about what you're going to say next, because you're always just sitting there thinking, okay, how am I going to respond? How am I going to interject? Just sometimes just sit, listen, and just pause. I think becoming a better listener was what really helped me become a better speaker in some ways, if that makes any sense. And that wasn't really that wasn't like a forced process. It just something I became better at and more aware of over time.
Yeah, and that's what's challenging, right? I mean, and it sounds strange to say that listing is
Yeah.
challenging, but it is, right? I mean, if more people actually listened to each other, we wouldn't have anywhere near as much conflict and hatred as we do. That's more of a just statement around humanity, right? But there's something else that's interesting, which is that especially in a kind of post-COVID world where everybody's doing Zooms and they're ripping podcasts from Zooms and all this. Do you think that people are more comfortable and maybe speak more naturally when it's audio only, like in a format like this, versus through a video? Because I have to tell you, like the interviews that I've been doing on Twitter Spaces, they seem a little bit longer in content in terms of people's answers. It's almost like there's a comfort level when you don't have a camera on you.
Okay, that's interesting. I kind of have the reverse experience when I go to conferences and I speak to people in person. I find I connect better with people in person. There's just a different energy you feel in person than you typically would over a computer screen. So I would say that if I were given the choice, I would always speak to somebody face to face. You and I had never spoke face to face, and we worked out quite well. But if I ever have the opportunity to speak with you at a conference, I would definitely welcome that. So I find that when you're speaking with somebody in person, not only are you listening to their talk, but you're also reading their facial expressions and their body language better, and you're able to respond better. So again, not investment advice. I don't really give my views often, and I don't really take any positions. But I think this is part of a broader market sell-off that isn't yet over, and we haven't really seen the bottom. I think what's happening in the news this week regarding FTX and BlockFi that just hit the headlines today. I'm pretty sure that these are just symptoms of a larger problem. They've had these liquidity crises or problems for a while now, and it's just starting to surface. When everyone knows about it, then everyone starts withdrawing their cash or cryptos, whatever the case may be, and then you get a bank run. So it's not like the problem just happened today. The problem's always been there. And I personally think that we might see a few more cases like this before things kind of bottom out. In terms of whether or not it'll be a Lehman event and we'll have a broader contagion on every other financial market, my personal view is that I don't think it would be as bad as 2008, considering that the crypto markets are relatively small compared to other asset classes globally. And I think that institutional investors will definitely get hit, but the retail investors have to worry about a recession more than the crypto holdings. So I think there's bigger problems than crypto's going to going down, unless most of your net wealth is tied to cryptocurrencies. Then yeah, that might be bad as well.
No, well, listen, I always go back to I don't know the future better than anybody else, right? It's about conditions, probabilities, and outcome, which is another nuance which I think is missed, especially on Twitter. But so maybe this is, and again, I tend to be a little bit more contrarian. So maybe this will be kind of interesting spin on things. Of the topics that you've covered, maybe in the last, I don't know, 3-6 months, let's call it. What are some of the things which have broadly had the least number of views? And the reason I ask that is I would view that actually as it's like on Seeking Alpha, they have undercovered stocks, right? Stocks that haven't been read about in months, and those end up actually being pretty good performers because nobody's really talking about them, right? So, are there any like subject areas, certain investment ideas that or macro thoughts that you've had other people express to you that just from the data have not been really picked up by YouTube's algo by viewers? Because that could be actually a contrarian investment play.
Yeah, that's a great question, Michael. And I often wonder why these aren't doing well. So the of the topics that I've covered that have garnered the least consistently the least attention in terms of views, anything to do with the metaverse, anything to do with NFTs, gamify, e-gaming, and anything tech related that's not directly related to financial markets. Altcoins tend to perform poorly if unless it's a big altcoin like ETH or Solana. I find that interesting because there are huge YouTube channels that cover all of those things with millions of views on those subjects. Maybe I'm just not doing a great job covering it myself, but I feel like that's just something that was really interesting to me because these are all like really hot buzzwords that pretty much a lot of other people on other channels are talking about. And for some reason, it's just not working for Kitco. And I think it comes to the DNA of the algorithm. Kitco, even before I joined, was more heavily focused on precious metals and resources. And I think that the core audience is still there, and that core audience that likes to watch interviews about gold or the macroeconomy or resource stocks, they're not going to watch an NFT video, and so that doesn't really. If their interest is low, meaning they click on it or they don't even click on it, and they don't stay on the video for very long, then the algorithm determines that it's not a popular video and it's not going to recommend it to more people.
That's funny because I have nothing to back this up. This is more just full conjecture, but I wonder how many of those channels and videos that got millions of views if they were authentic versus bots, right? Because there was a lot of, I think, false hype. It made it look like it was important or popular, but it was just programmed views.
I think YouTube, correct me if I'm wrong, anybody who knows more about this than I do, but I think YouTube would detect if you have fake views. And over time, if your channel has a lot of fake views and a lot of videos, you would get penalized somehow. I think you would get taken down.
Yeah, no, that's fair. I don't. It's just an interesting observation. Maybe it's just also a function of price obviously collapsing, people saying what the hell. But that's also interesting, right? So and this is the audience part of it, right? So when you look at the demographics of those that are watching, I'm going to assume that it's mainly male. I've seen that across the board when it comes to financial media. Probably mid 30s to late 40s. But what's sort of the demographic mix of those that are watching your content?
On Kitco, it's a pretty even curve. Like it peaks around the early 40s, so 35 to like mid 40s, and then there's like a pretty even distribution around that age range. Actually, not a perfect bell curve, but similar. If you were to visualize that, most of our audience is U.S. based because we're an English channel, and I would say most of our viewers are male, as you pointed out. Although that just records people with an actual YouTube account. You can always watch YouTube without signing in, and of course, then there's no data. But of the people who have signed in and do record their data, it's overwhelmingly, I would say, 95% male. Now, I have noticed that viewership directly correlates to market volatility. Not so much direction, but volatility. Let's say if things are moving dramatically down or dramatically up, that's when we get more viewership, and that makes sense, right? COVID was actually one of our highest periods of growth, just because everyone wanted to know what was going on. There was a huge period, you remember, in March 2020 when everything collapsed, and everyone wanted to know if the world was ending, and then things quickly rebounded after that, following Fed limited QE, and people started getting free money, and people watched the news to pretty much learn how to invest their free money. So that was a great period because there was just so much volatility. The same thing could be said of any recession, really. It's when things are flat and nothing's really like exciting going on, good or bad, that things become slower views wise.
What's funny is that people will search more for end of the world type of doom porn than actually learn how to farm in the event that it's the end of the world. I don't know, more just kind of a funny thing. It's like people gravitate towards this stuff, but they don't ever actually do anything in the event they actually believe in it, to prepare for it. More of a side note. But final question on my end. Again, everybody here, make sure you follow David Lin on Twitter, and I'm sincere. Check out his great interviews on YouTube. Final question, and you and I have talked about this ad nauseum. Seriously, how do you make your hair so good? Anybody that talks for every single interview I've talked with David on, I always mention his hair is like on point.
That is subjective. I appreciate your comment. My mother would disagree with you, but yeah, it's just it's just hair gel, man.
Whichever company you've got for the hair gel, you got to like do like a paid sponsorship, because
that'd be great. I tend to switch it up every once in a while because I think it's like, I don't know if there's a correlation with the markets, but like when things are slow, people start just shitting on my hair because they got nothing else to shit on, and then I have to switch it up. So I switch up my style every couple months.
Oh, good. I figured I had to ask that question. Everybody, thank you again for joining, and always a pleasure talking to you, David. I think you do some good work, and more people need to pay attention to what you're doing with Kitco. So appreciate everybody joining, and I'll do another space as usual tomorrow. Thank you, David.
Thank you, Michael, and thank you for being a part of my show. I look forward to talking to you again soon.
Sounds good. Cheers.